Beauty group Natura will streamline structure to resume expansion. Natura has announced it will streamline its business structure, involving changes in its executive leadership and board of directors, as part of efforts to revive the growth of the beauty conglomerate. Under this new structure, the group will eliminate a non-operational holding company, which will be integrated into Natura Cosméticos S.A., encompassing the Natura and Avon brands in Latin America. The information was shared with Valor by the CEO of Natura & Co., Fábio Barbosa. Mr. Barbosa will take the chairman's position, which was shared by the company's three primary shareholders, Alberto Cibra, Guilherme Leal, and Pedro Passos, who will remain as board members. Together, they own 38.4% of the company. Natura has been undergoing an extensive restructuring process, having sold off its luxury brands Aesop and The Body Shop, but it still faces a significant challenge with its Avon International division, outside Latin America. This division is a financial burden, draining resources, lacking profitability, and has been for sale for months. The company attempted to sell this division, and IG4, an asset management firm specializing in distressed assets, is currently evaluating the business, though there is no exclusive dealing agreement. The division operates in 36 countries, but only 4, South Africa, Romania, Turkey, and the Philippines, are profitable, making it difficult to attract potential buyers. Finding a strategic alternative for this division, currently led by executive Christoph Nierink, has proven challenging. The business filed for Chapter 11 bankruptcy in the United States after Natura acquired it at an auction late last year. Mr. Barbosa, who will step back from daily activities, now under the responsibility of João Paulo Ferreira, noted that the company has been considering streamlining its operations for months, but the process was expedited due to the market's strong reaction to the group's recent financial results, released last week. The company's stock plummeted nearly 30% during trading on Friday, 14, marking one of the worst declines on the exchange this year, even after Natura announced an 84% reduction in net losses. The rise in operational expenses and low net profit margin in Brazil were the main factors behind the significant drop in the group's stock on the 14th. The company experienced a cash burn, with a negative EBITDA of 139.6 million Brazilian reais in the fourth quarter of 2024 and a negative margin of 2.4% on sales. The poor performance contrasts with the positive figure from the same period in 2023 when EBITDA was 466 million Brazilian reais and the margin was 9.8%. That occurred despite a 49% increase in net revenue, reaching 7.1 billion Brazilian reais. Market analysts continue to express skepticism regarding the company's restructuring efforts. Natura & Co. will propose to shareholders its merger with Natura Cosméticos S.A. João Paulo Ferreira, currently the CEO of Natura Cosméticos, will oversee the integration of the Natura and Avon brands in Latin America. An extraordinary general meeting, EGM, is scheduled for April 25. This move reinforces the strategic focus on operations in Latin America and the leadership of the Natura brand, strengthening the foundations and essence of the business, the company stated in a note to the market. The reorganization also involves the departure of the holding company's current chief financial and investor relations officer, Guilherme Castellan. According to the company, the executive is undergoing a transition planned for months and is expected to leave his position on May 12. Mr. Castellan will be succeeded by Silvia Vilas Boas, the current Natura Cosméticos CFO. She will also take the role of Chief Investor Relations Officer for the parent company that will control the holding. Mr. Barbosa also reiterated that the company has launched a share buyback program for Natura.